All right, let's talk about today's business matters. It looks like Americans had a tighter grip on their wallets last month. The Commerce Department said today that U.S. retail sales fell by 0.9% in May from the prior month. And that's down from April's downwardly revised 0.1% decline. The May reading represents the steepest monthly decline since January, and industry analyst at Bankrate attributes the consumer pullback largely to shoppers front-running U.S. tariffs. In early spring, Americans rushed to purchase big-ticket items, especially cars. That sent retail sales surging in March, but spending has reined in since then. Amazon's annual Prime Day sales event will take place from July 8th to July 11th. And the company said today that it's extending the event from 2 days now to 4 days. Amazon said the extra days were added because Prime members wanted more time to shop. Adobe Analytics said that U.S. shoppers spent over $14 billion during Amazon's July 2024 Prime Day event. The online retailer often competes with sales events from Walmart, for example, as well as Target and TikTok Shop. Amazon is offering discounts and perks to people aged 18 to 24, and the goal is to get more young shoppers as well to sign up for its Prime membership. Kraft Heinz plans to remove synthetic dyes from its products. The condiment maker announced it's going to remove the colors from its U.S. portfolio before the end of 2027. And the company also said it would not launch any new products in the United States with artificial dyes. Kraft Heinz product lineup includes Heinz ketchup, Jell-O, Capri Sun, and others. According to Kraft Heinz, nearly 90% of its current products are already free of artificial colors. The move comes as federal health officials under Robert F. Kennedy Jr. put renewed scrutiny on artificial food dyes due to potential health concerns. In January, the Food and Drug Administration banned the use of red dye number 3 in food, beverages, and ingested drugs. The FDA in April announced plans to work with the food industry to begin to phase out petroleum-based synthetic dyes from products. And the Navy is looking for innovation from startups. The process of startups teaming up with the Navy in the past has been described as a nightmare, but they've been working on streamlining the process for easier adoptions of good ideas. We're now going to go to Sean Marshall, NTD, and he has more on this.
The Navy wants you, startup companies. Navy's Chief Technology Officer Justin Finelli told TechCrunch, "We're more open for business and partnerships than we've ever been before." In a TechCrunch podcast, Finelli told TechCrunch, "We're humble and listening more than before, and we recognize that if an organization shows us how we can do business differently, we want that to be a partnership." But the Navy isn't just looking outside, they're also looking inside to their own soldiers. The Program Executive Office for Digital and Enterprise Services, or PEO, has published an innovation adoption kit for internal use to encourage and streamline sailors who want to present ideas for integration and introduce new technologies. One purpose is to get over what they term as the Valley of Death, where promising tech dies on its path from prototype to production. Finelli said, "Now, when something breaks, it's much more likely that we have 2 or 3 other options to replace them. So we are now able to more often disrupt ourselves with implementing and adopting innovation." And that's number 1 on their list of top 10 behaviors in the Innovation Adoption Kit: disrupt ourselves with experiments. The Atlantic Council Commission on Defense Innovation Adoption is quoted in the kit for saying, "We have found that the United States does not have an innovation problem, but rather an innovation adoption problem. The DoD struggles to identify, adopt, integrate, and field these technologies into military applications." Sean Marshall, NTD News.
It seems like work-life balance is out of whack. This is based on new research from Microsoft. The software provider found that workers are increasingly clocking into a seemingly infinite workday. The company analyzed data from its Microsoft 365 service. It found that the number of meetings booked between 8 p.m. and midnight has risen 16%, and this is compared to last year. And messages sent and received off the clock averaged about 60, a 15% jump from last year. The report notes this is partially due to an increasingly global workforce. 1/3 of workers said in recent years they felt it has become impossible to keep up, and that is based on a separate Microsoft survey. The award for the world's best airline for 2025 goes to Qatar Airways. Skytrax World Airline Awards make the announcement today at the Paris Air Show. It's the ninth time, actually, Qatar Airways has received the honor in the 26-year history of the awards. The carrier was also named Best Airline in the Middle East, World's Best Business Class as well, and Best Business Class Airline Lounge. The awards come just weeks after Qatar Airways announced it was buying roughly 200 wide-body jets from Boeing in a historic order. Meanwhile, a push to raise the federal minimum wage is back on the table, with a Republican lawmaker leading the charge. Senator Josh Hawley of Missouri has sponsored a bill to raise wages to $15 an hour. Experts believe Hawley's support could increase the odds of raising hourly rates for the first time in 16 years. The current federal minimum wage is $7.25 and was set in 2009. Critics charge that raising the wage will be at the cost of jobs of lower-paid workers. 1/3 of states already pay most workers more than the federal minimum, including Missouri. Some have charged as well that that's why Hawley is supporting the bill to level the state's playing field to attract businesses. Streaming has officially dethroned traditional TV. For the first time ever, streaming viewership has surpassed cable and broadcast combined. Nielsen data from last month measured TV viewership at 44.2% of all TV watched. Streaming inched past to a record high of 44.8%. Streaming has jumped more than 70% since Nielsen started its monthly TV conscription report 4 years ago. So free services have contributed to much of the uptick. YouTube alone has climbed 120% in recent years. Nielsen measured YouTube as the source for nearly 13% of all TV viewership, and that's the highest share achieved by any streamer to date. No matter how much travelers prepare for trips, it feels like these days anything can throw a wrench in plans, from extreme weather to mass computer glitches. As a result, demand for premium insurance has risen. Here's more.
From deadly crashes to aging traffic control technology, traveling has packed on a multitude of issues in recent years. With the risk of canceled plans for any reason, more travelers are taking out higher-end insurance policies, even if that means paying higher premiums. This is based on interviews with travel executives, insurance companies, and analysts. Cancel for any reason protection has spiked around the world by nearly 35% since last year. That's what Squaremouth, the largest travel insurance marketplace in the U.S., reported. Parametric insurance is one of the newest and growing categories in the industry. This is when a payment is automatically triggered after a specific event, such as a delayed flight. This means no claim needs to be filed to get paid. There has also been a rise in travel advice, particularly due to evolving immigration restrictions in the U.S.
Now on to China. A prolonged property slump in China is expected to settle in. Goldman Sachs has shared updated projections for new home demand. It expects demand to be drastically lower than the 2017 peak of 20 million units that year. At the same time, the property sector accounted for roughly a quarter of economic activity. Now, the investment bank is forecasting demand for new homes at less than 5 million units per year. Goldman said its previous estimates did not account for investment demand possibly turning negative and owners selling vacant properties. European Commission President Ursula von der Leyen said that President Donald Trump is right about broken trade rules. She warned that China's behavior has distorted world markets. Von der Leyen said yesterday at the G7 summit that Beijing is not willing to live within the constraints of the rules-based international system. She said the current global trading system isn't working as it should and lacks clear rules. Von der Leyen said Trump is right about broken trade rules, saying there is a serious problem. She also said that the biggest shared problem began when China joined the World Trade Organization in 2001. All right, joining us now to discuss the Trump accounts for babies, which would give American newborns $1,000, is America's accountant, Daniel Geltrude, certified public accountant and founder of Geltrude and Company. So good afternoon to you, Dan. Big picture here. Talk to us about the impact these Trump accounts could have both on the public and the government.
Sure. So let's start off with how much is this going to cost? Well, the way the program is being proposed is every newborn child between the time frame of January 1st, 2025, December 31st, 2028 would get $1,000. The cost to that for the government would be over $3 billion a year. So this is not cheap. Although I do believe it is a very positive idea because it is going to encourage savings, but at what cost? Because when you factor in the growth over time with only $1,000, and I did some quick math here, from birth to age 18 at a 5% return, compounding, you're only talking about coming out with about $2,500. So it's not substantial.
Okay, so it looks like you might need some extra contributions to this, right?
Yes, that's the whole point here, right? So basically, the government seeds these accounts with $1,000 one time. Then, for it to really matter, you can contribute up to an additional $5,000 per year. Now you're talking about having substantial growth in these accounts. However, when the money is withdrawn after age 18 and it's used for specific purposes, such as education, when that money comes out, the earnings on that money will be subject to capital gains tax. When you look at a 529 plan, on the other hand, you can fund that, and the growth is not just tax deferred, it's tax free. So the question becomes, who would do this when you can use a 529 for education, which is a better tax deal?
Right, and can you talk to us about the 10% penalty as well for using the funds on unapproved expenses?
So what happens is, and for many people out there, think about if you withdraw too early on your IRA or your retirement plan, you get hit with a 10% penalty on what you withdraw. In addition, that money would also be subject to regular income tax rates, not the capital gain rate. So you're getting hit with a higher tax rate, and on top of that, a 10% penalty. So withdrawing early, if you're involved with this account, not a good idea.
So children gain partial access at age 18 and then full access at age 30. I mean, is there anything to be said here? Does this timeline strike the right balance?
Well, I think it does, right? Because you don't want to have this money in the hands of young people who perhaps would not spend it wisely. So the whole point here, it must be used for the right purpose, or it's going to end up in a situation where you're not going to get the benefit of it because it's going to be subject to penalties.
And you mentioned the 529 plan just a moment ago. Can you talk to us more about that? How does compounding in the Trump accounts compare to the 529 plan over a similar time horizon?
Well, they're similar in that they are invested in what would be considered relatively safe funds, right? These are not meant to be high risk investments. The big difference between the two is when the money is pulled out for a qualified use, the Trump accounts would be subject to capital gains tax rates, although lower than ordinary, they are still taxed. When you're pulling the money out of a 529 plan used for educational services, all the growth on that account is not subject to any tax at all. So you really end up having, shall we say, more buying power because you don't have to tax affect what you pull out on a 529.
And Dan, could we get some recommendations from you? Should families prioritize these Trump accounts over other savings tools, or perhaps use it as a complement? Some tips from you.
Yeah, I think this is a way to complement other things. I think the other vehicles, specifically 529s, are actually more advantageous. But look, this is where you get into where it becomes a much greater benefit for those who have the means to be able to contribute in. So you could have a situation where you're saving for your child's education through a 529 and you can use the Trump accounts. How many people out there can actually fund both? So I think these Trump accounts may need a little bit of fine tuning to incentivize people to participate in them.
Okay, I'll just get one more comment from you. Where do things stand now? If this Trump account thing becomes a reality, does this plan meaningfully change the savings landscape, or how does it change it, if at all, for lower and middle income families?
Yeah, well, that's the issue right there. I don't think it's going to have a substantial impact on your lower income families, and that is where the problem is. It's not going to substantially change the landscape. And let's not forget, this is part of that one big beautiful bill. So we don't know if that bill's going to be passed, and even if it is passed, will the Trump accounts be part of that bill? So there is uncertainty as to whether this will come to fruition at all.
All right, Dan, America's accountant, thank you very much.
Thank you.
All right, on to markets. Stocks closed lower today as the Israel-Iran conflict entered its fifth day. It's fueling investor anxiety. All major indexes fell. Only the energy sector rose due to spiking oil prices. Investors also reacted to weak U.S. retail and factory data while awaiting for the Federal Reserve's policy decision on interest rates, which is coming tomorrow, Wednesday. So solar stocks tumbled after proposed tax credit phase-outs, and Eli Lilly shares dipped following its $1.3 billion deal to acquire Verve Therapeutics. And with that, all on today's Business Matters.